Hello, everyone, and welcome to another Capra in Asia expert panel discussion. My name is Zenon Capra, and I'll be moderating this panel where we're talking about the dynamic nature of cross-border payments in Asia. I think certainly if we've seen anything over the past couple of years during the pandemic is the digitization of everything finance, and cross-border payments are no exception to that. I think when we saw here in Singapore during the peak of the lockdown, people, instead of going to Lucky Plaza or one of the traditional remittance venues, we're using digital payments. We're using some of the digital wallets or many of the platforms that are available here in Singapore. During the next 45 minutes or so, we're going to be talking through some of the issues, challenges, and opportunities in the cross-border payments market, including the opportunity around alternative rails. Traditionally, banks would rely on the correspondent banking network to process payments globally or on their own networks. But increasingly, we have a number of choices for banks to be using to provide better, faster, cheaper payments to their clients, whether they be businesses or individuals. Just a couple of housekeeping notes before we get started. This webinar is being broadcast in listen-only mode, but we will take questions from the audience, so please use the Q&A functionality. We'll try to get to as many of those as we possibly can during the webinar, but if we don't, we'll get back to you afterwards with answers to your questions. In addition, this webinar is done in conjunction with a report that has been recently published between Capra in Asia and Finastra, featuring some of the speakers that you'll hear over the next 45 minutes on cross-border payments in Asia. So we'll include details about how to download that report. At this point, I'd like to welcome the panel that we have for today. Our three panelists today, we're starting off with Deepan Dagur, who's the head of Visa Direct APAC for Visa, Hridoy Krishnakumar from DBS Remit, who's the regional head of DBS Remit, and Dhiraj Joshi, who's the regional head of Finastra. Thank you so much for everyone being here today. Really excited about doing this. Dhiraj, let me start off with you with a little bit of scene setting. Maybe you can start us through, kind of in your mind, what are the top three trends that we're seeing in cross-border payments in Asia today?
I think it's a very interesting question, right? What we are seeing, there is a massive increase in the cross-border volumes, because of the economic connectivity, the trade volumes are increasing, and as well as from the e-commerce penetration perspective. So if we need to group it in a three specific trends, I will say the first one is the focus on the real time, right, or near real time. Every entity or every player, whether it's a traditional or the new player, are trying to build the network in a way that they can offer the real-time schemes or the cross-border real-time schemes in a real-time or the near real-time fashion. So to start with banks are trying to tap on their foreign branches and able to build the network so they can offer the cross-border network by leveraging their network. Second, the fintechs or the new players are also building the network with the partner banks or the players in the ecosystem to achieve the same thing so that their consumers or the SMEs can do the payments over a real-time fashion. The other one is very interesting, the bilateral arrangement we are seeing between different real-time infrastructure led by the government as well as the central bank initiative. I think the most recent one was Singapore Fast being connected to the Thailand PromptPay, and we have also seen that it's been endorsed by the G20 that there is a need of the bilateral cross-border real-time interconnectivity. So that's the first one. The second one is, there is a new platform or use cases, or I can say the pilot over the CBDC or programmable money, or you can say in terms of the blockchain or DLT based network, where there are new use cases being set up by leveraging this technology. So there were few initiatives we have seen in the market, and MAS was one of the key anchor on implementing those use cases. Third, I'll say that which is still yet to mature, that under overlay services for the cross-border payments, whether it's a cross-border bill payments or pre-validation services or any sort of proxy-based cross-border payments. So there are players which are coming up, and we will see that this will be offered as an underlying services over the cross-border schemes. So I think these are the three ways I'll categorize it. Yeah.
Yeah, those are all really good points. I think the overlay services, definitely want to come back to that later on because the value-added services around this are very important. Ridoy, let me come to you. I mean, Dheeraj talked a little bit about from the supply perspective. What about from the demand perspective? I mean, at DBS Remit, what are the changes in demand that you're starting to see from, or that you have seen over the past couple of years from retail?
Sure. So I think some of these trends that Dheeraj touched upon, obviously directly affecting the customer journey and the customer experience. So I think broadly, though, customers expect, you know, optimization across cost, speed, and transparency. And we see this constantly. On the cost front, by way of connecting to, for example, real-time payment rails, customer expectations are that costs will continue to go down, and especially then driven by some of these, central bank-led initiatives like Prompt Pay, Pay Now UPI, and Pay Now Do It Now. That's just going to continue the trend lower as these sort of real-time domestic rails connect to each other and drive down the cost. In terms of speed, I think the latter also achieves that sort of attribute of the cross-border payments, which is making them real-time, if not near real-time. And then finally, transparency. That's another expectation from customers, which is improving the ability to trace or track a payment, providing services like validation of certain details of a payment message, such that you kind of take away the necessary details a remitter has to bring when initiating a payment. Another area we're seeing demand is around new endpoints. So as consumer behaviors change, and that, of course, was accelerated during COVID, you see the adoption of new endpoints. And by endpoints, I mean things like wallets. So, we launched Gcash during the pandemic. And the first couple of months, we were seeing, the wallet endpoint kind of taking up about a couple percentage points of the overall transaction flow to the Philippines. Now that's grown drastically to over 30%. So that's been one kind of behavioral change. And we have to continue to, deploy wallets as an endpoint across our major corridors, and that's something we continue to look at and sort of deploy where it's available on a cross-border basis. But ultimately, I think customers are spoiled for choice in a market like Singapore, with the proliferation of fintechs, traditional MSOs, MTOs, digitizing their, what you referred to earlier, the bricks and mortar offering into an app-based service. It just continues to raise the bar on customer expectations.
Yeah, certainly. I think it's good. It's an excellent time to be a consumer and a remitter in this market, certainly with all the options that are out there. Deepan, let me come to you. I mean, this concept of endpoints, I mean, that's maybe we could start off and you can give a brief intro to what Visa Direct does and then talk about the endpoints. I mean, where are the drivers of change and what kind of demand are we seeing for these various different endpoints, whether it be card, wallet, or traditional?
Sure, absolutely. Thanks, Senan. So the first part of the question, at Visa Direct, what we're doing is we're offering bank and fintech clients a single point of access that enables them to move money cross-border on behalf of their clients to accounts as endpoints, cards as endpoints, or digital wallets as endpoints, with one single connection. So building on that, maybe we can just quickly go through the three, right? For accounts as endpoints, that's something we all understand really well. You're sending money to a bank account in another jurisdiction, right, cross-border. And the benefits or the requirements that Ridoy just talked about earlier, that a customer is looking for, obviously the banks that serve those customers are looking for the same benefits, right? Speed of delivery, cost effectiveness in the transaction, geographic reach, and flexibility to add on geographies as time goes on after that single connection has been made. So that's a core endpoint that will continue to grow. Second, we're seeing interesting demand for a card as an endpoint. The 16-digit PAN that we all know on our credit cards or our debit cards being used as an endpoint to receive the funds. This opens up new use cases beyond just P2P remittance, for example, but also B2C disbursements. This is something we've seen a lot of demand for with influencer platforms, gig economy, VAT refund, and other such cross-border use cases beyond just P2P remittance. The third endpoint that I believe Ridoy also mentioned there was digital wallets. I mean, digital wallets in Asia Pacific, they're probably even more prevalent than bank accounts. There's definitely more digital wallets in existence in Asia than there are bank accounts. So even from a reach and network inclusivity point of view, it's important to have that cross-border proposition to digital wallets as endpoints. And this is only going to grow in the years ahead.
Ridoy, those are great points, Stepan. Ridoy, I mean, coming back to that endpoint question, I mean, there are new rails like Visa Direct that enable these connectivity, whether it be cards or and wallets. I mean, as a bank, how do you then look at the choice of rails that you're using and how you integrate those into the organization?
Yeah, so I think one thing that we've realized as we look across the kind of landscape of payment network providers is the speed of innovation has been highest amongst non-banks. So the fintechs, schemes, MTOs, who are now digitizing and have the organic network, where they have a monoline focus on moving money. That is their kind of sole purpose, and therefore they're focused on innovating and sort of iteratively improving upon that journey of moving funds across borders. Banks like ourselves, and others in the community, I think they're looking largely to innovate upon their organic footprint and presence, either by going deeper into a given market where they've always had the connectivity, but connecting to a real-time payment rail, or adopting constructs like, for example, Swift Go, which is kind of like a framework for how banks within Swift should operate to enable low-value, instant kind of real-time payments as the fintechs do today on behalf of their customers. But I think this framework has its merits, but perhaps doesn't solve for things like the last mile or breadth of endpoints that the consumer requires. So, with that, I think banks must consider alternative providers to kind of build out their capabilities and to leverage their ability, the provider's ability to innovate and incrementally, benefit. So, for example, if we're working with a provider that has a capability, let's say, into a given market, but they're going deeper in that market by connecting to a real-time payment rail, using a proxy service, providing validation services, that provider who's innovating incrementally in that market for that destination that you need, you get to benefit from that because you're connecting to them or speaking to them, let's say, through an API. So I think these are kind of the things that we evaluate. And I think it's just a matter of time before banks kind of widen their selection criteria and form partnerships in the non-bank space in order to compete.
Yeah, I guess, I mean, just sticking with you for a minute around that, I mean, I guess it's just not practical for, even like DBS has a great footprint here in Asia to reach all of those different endpoints, right? I mean, inevitably you have to work with partners, I guess, to get it done. Would you say that's the case, Ridoy?
Yeah, I think it depends on who you're solving for. So if I'm solving for the customer who's sending their salary payment home, and have been doing for the last 5-6 years, and we have a bilateral relationship onshore, with a partner that has a great deal of breadth, reach, and can provide good service to us and to our customers, then it's a question of going deeper potentially with that partner and seeing, how they can help us with what I referred to earlier, which is last mile and any other kind of enhancements to the service. But if you're trying to build out a payout network and do it quickly, it does require thinking kind of beyond the incremental bilateral approach. And for that, you probably want to work with a network provider or a few network providers that give you the breadth, depending on strategically, how you want to position your payout, your payout proposition.
Right. That makes a lot of sense. I mean, Diraj, let me come to you. I mean, with all of the things that Ridoy was saying about the increased kind of complexity of all of this in terms of having multiple different providers, I mean, technology obviously plays a key role in this. Can you talk about, I mean, your role at Finastra? You're obviously working with many clients around the region on this, and potentially some of us here on the call as well. What have you seen, and what is the role of technology in enabling kind of this multi-rail approach to cross-border payments?
Yeah, I think very good question. So I'll pick up what Ridoy mentioned, right? For a bank like DBS or any bank in the region, to implement any use case or implement or solve a problem, they may need to work for multiple network providers. That's one, right? And the other point he mentioned that, the scale of innovation with the third-party fintech is much more faster than any traditional bank, right? So if any bank has to be successful in quick to launch or to remove the entry to barrier for adopting those new payment rails, then a technology can play a good role. And where Finastra comes, where we bring ready adapters for those payments rails, we bring the solution that can an out of the box kind of capability, and for a bank they can onboard those new capability quite quickly, right? Because it's ultimately consumption of API, how you build or consume the API being provided by the third party. It could be your payments network, it could be the companies which provide like third party validations or proxy based capabilities where they can consume a proxy data and fetch the respective account number. So all those new use cases or underlying services, you have to consume a lot of API. From a bank's perspective, we have seen, especially in this region or emerging market, banks IT or the infrastructure is not ready to have, able to quickly onboard those services. The solution provider like us can bring those capability to the banks so that they can quickly onboard those services. I mean, give us some example, and there was a partnership we signed with Visa on bringing Visa Direct to all of our customer and enabling Visa Direct in our payments hub solution. So the similar kind of partnership we are also building with other alternate rail provider, and we are seeing a very good demand from the market because it's actually able to solve the IT problem. So if the business case is solid, but you still have to solve the IT problem, so we are able to make a good progress on those aspects. Yeah.
That's interesting. I mean, the tie-up with Visa, Deepan, let me come to you on that. I mean, what does the tie-up with Finastra, what does that enable for Visa going forward?
No, absolutely. I think it's a terrific way to sort of accelerate that integration process, right? As a client is looking to take that cross-border payment capability that they have in their payments hub from Finastra and integrating that into what they might do with an alternate rail provider such as ourselves to enable them to quickly add on corridors, add on reach, and essentially go to market a lot more quickly than they would otherwise be able to without that partnership. So we're terrifically excited working with Finastra on extending that capability across Asian banks in the region.
Rido, I want to come back to you. I mean, you talked about some of the decision points that you would take from the business case for looking at new alternative rails. I mean, do the challenges that Dhiraj and Finastra and Visa solve for, do those resonate for you in terms of actually onboarding with those alternative rail providers? I mean, what are the key challenges from a bank's perspective if you wanted to, work with a Visa Direct or a Wise B2B or one of these alternative providers?
Yes, I think there's a few criteria. I think once you get over the business case sort of, details of does this make sense, I think that one is relatively easy to solve. We have demand from our base to, let's say, deliver funds to a particular destination. But I think a couple of areas where, banks would be sort of looking to evaluate a potential partner. One is the ease of connectivity. I think Deepan touched on it in terms of integration. Banks being large organizations, prioritization of tech resources, having the bandwidth within a tech team is always a challenge, and so you have to prioritize. And so getting that capacity allocated to this project can be an issue. Another one is really risk appetite. Because banks traditionally are comfortable working with others in their correspondent banking network, albeit though for let's say a cross-border payments partnership on a bilateral basis to serve, let's say, its remittance of payment needs. And then the third is really around operations, I would say, because with that level of work with other banks through, let's say, SWIFT, your entire operational kind of framework for communications, for things like, tracing a payment, returns, cancellations, all the kind of stuff that happens in a negative scenario where the payment does not get fulfilled. That's something that's kind of developed over time between banks. And so when you move away from, let's say, a non-bank provider, you have to figure out, hey, does this work for me in terms of the operational post-processing kind of handling? And also with that, your risk appetite, also has to be appropriately kind of tuned, because you don't want a scenario where, with working with the bank community, you see this level of, this percentage of your payments that get rejected or have these issues, versus a non-bank where it might be slightly different because they operate as a network of network and they communicate with you through APIs. So you have to consider that as well.
Those are really good points around the risk side of things. And that's probably keeping a lot of the banks from moving on to some of these alternative rails. Hridoy, just sticking for you for a second, I mean, where do you think the industry is now in terms of adoption of, let's just call them non-Swift alternative rails, in terms of percentages of volume that are going across these? And where do you think we're going to get to in terms of where the industry should be in terms of percentage that are going across the alternative rails?
I think it's still a pretty small minority amongst the bank community. And again, I'm speaking more to this low value kind of payment space. I think that, the bank payment landscape is dominated by your high value payments that have gone via traditional rails. But as you see this convergence between consumer and corporate payments, and the demands are kind of the same, be it, real time, near real time, low cost, etc., and that transparency aspect I talked about earlier, you'll see an increasing proportion of payments that go via these non-traditional means. We ourselves, have a hybrid network and not working exclusively with banks. We also work with non-banks. So I think it's just a matter of time before, you see that proportion increase. And we're seeing that.
Deepan, let me come to you. I mean, that point about high value payments versus low value payments, what do you see as the trends? Would you agree with Hridoy on that? Do you see that same trend? I mean, we have the convergence between low value, high value networks, but I mean, do you think that the high value is going to stay the domain of the banks, or do you see opportunities there for alternative rails as well?
I think there's opportunity for alternate rails in both low value and high value, and we obviously have solutions for both. Of course, the benefits that you see from alternate rails on low value, high value are a little bit different, right? And in the low value space in particular, I say low value, like sort of below $100,000 a transaction, below $1 million a transaction, what you'd normally expect from P2P, wealth, or SME. The question is, what are the benefits, right? And if those benefits aren't solved for, I think what the banks are seeing is if they're only relying on traditional correspondent banking, bilateral relationships on SWIFT, and not exploring alternate rails, generally experiencing market share erosion, right? And that's what we're trying to help them solve for. If the cross-border business is growing 15% per annum, but the market's growing 30%, that is market share erosion, right? And that market share is going elsewhere, right? So those benefits, the need for those benefits have only accelerated post-COVID. And I think what's happened is customer expectations have evolved and shifted very rapidly. And maybe I could give you an example. Digital adoption in all aspects of a customer life, whether it's ride hailing, e-commerce, influencer platforms, gig economy have changed, right? Customers are expecting choice. Customers are expecting funds, like the product or the service, to be delivered quickly, right? And they're expecting it to be cost effective. So that expectation that a customer has, whether it's low value, whether it's high value, from those other digital service providers are no different to what they experience and expect now in cross-border payments. And those who are unable to solve for that will unfortunately experience market share erosion.
Yeah, it's many of the ways that social media platforms have done us a disservice. Is one of those is putting expectations even higher, especially in the younger generation as well. Dhiraj, I want to come to you. I mean, the benefits of these alternative rails for consumers are manifold, right? I mean, it just not selling Hridoy's business that much, but I mean, DBS remit, there's no fees, there's a little bit of spread on the FX, but otherwise really cost effective. And same thing with Revolut or TransferWise or any of these other platforms that either are delivered through banks or otherwise. What can organizations do then? Because there is, regardless, kind of like what Deepan was saying, there is market share erosion and there's also fee erosion in this as well. I mean, are cross-border payments becoming commoditized now? And what have you seen banks do to move beyond that and to continue to drive revenue? Is it just a question of scale, or how do you see banks reacting to that, Jiraj?
Yeah, so I think banks are very proactively picking up those new payments rail and trying to build new solution, right? For bank, cross-border payments is a product. And these all network providers or additional capability which the fintechs or third party are bringing are the additional services to generate more revenue or protect the revenue and implement the new use cases, right? So I think for what Deepan also mentioned, right, that the P2P use case where the low value payments is very evident, right? It's lower cost, faster, and more transparent. But in the same way, for the high value side, it also depends what kind of capability the new players are bringing in terms of the liquidity, in terms of the compliance they can offer over the network. So banks are seeing a lot of value. They're trying to build the new use cases, how to offer it to the end consumers or the SME segments. Yeah.
Those are good points. Ritu, I come to you. I mean, do you agree with Jiraj? I mean, how do you look at it from DBS's perspective?
Yeah, I mean, look, I think directionally, the cost of cross-border payments are going to continue to go down, and this was sort of enshrined through the G20 directive back in October 2020, to lower the cost of cross-border transactions. And we're already seeing that trend with the launch of, PromptPay Pay Now UPI, etc. This will definitely continue this trend lower. But I think I agree with some of Dheeraj's points where, we have to do it two ways. The other day I was speaking with a fintech MSO, and the person who ran product made the comment that we've engineered away a few basis points of the FX spread. And by that, created operational efficiencies in managing liquidity that's allowed them to lower costs. So similarly, we as a bank have to also do the same thing, which is find efficiencies, digitize certain processes, perhaps in terms of how we screen the transactions to effectively manage our unit costs. So that's one way. And the other way I think is, while yes, we have to compete and stay within range of our fintech competitors, we still have to, make money to provide a service, and we can't do things below the cost to serve. So I think there is room to offer, to pay a premium for, a DBS remit product with a bank, for example, where perhaps the customer perception is I'll pay a premium with my high value transactions to use DBS. I trust their service. They're a big bank. I can pick up a phone and call somebody who can speak to me and, ease my anxiety if my payment hasn't reached or find out where it is. So I think there is room to kind of, pay a premium for that kind of a service. Or we have to get more creative in terms of, let's say, bundling, a remittance payment service with other products that we offer via, our digital banking app. So payments can be an overlay to other products that we offer. I think that's something we're also willing to explore to ensure that we maintain healthy unit economics going forward.
Yeah, I think that makes, the idea of cross-selling or, suggesting other products, and that kind of ties into the embedded finance world as well. Really interesting. Deepan, I want to come back to you. I mean, what do you see as the end state here? Is because, we haven't even touched on CBDCs and, God forbid, even stable coins, although that's kind of a verboten word here in Singapore, especially over the past couple of weeks and what's happened. But, what is the end state that we're going to get to in this? Is it just going to be a myriad of choices that banks, consumers, businesses have at their disposal, or are we going to see this consolidate into a couple of providers? What do you see as being the end state there?
No, sure, absolutely. And I think what we're basically going to see is what we call two things really that I think are interrelated. One is making global local, right? I think we all know what a local payment looks like. Relatively quick, very seamless, easy. You often don't even need the bank account number of the recipient, just an alias, like a phone number or an email address. Very low cost, very often actually free as well, right? Of course, a cross-border payment isn't like that. It's more complicated, right? And with good reason. But generally, all these solutions that the more innovative, forward-thinking banks like DBS with DBS Remit are deploying are generally making that global payment look a little bit more like a local payment in terms of cost, speed of delivery, um, and other functionalities, right? So that's obviously what we're striving to partner with our bank clients to deliver for their clients. And obviously, there's still a gap between what a global payment looks like and what a local payment looks like, and with good reason. But over time, I think that that gap should reduce, and that's the goal we need to move towards as an industry.
It makes me think about going out to dinner at one of the farm-to-table restaurants. So we need to have the equivalent for cross-border payments, whatever farm-to-table would be in terms of cross-border
Absolutely.
payments. We have a couple minutes left here. I want to take a look forward into the future. So, Jiraj, let me come to you. We'll go to each of the panelists for their ideas on this. But if we skip forward 2 years when we sit down again and do a similar catch-up, what do you think will have surprised us about the cross-border payment industry? I mean, we've talked about a lot on this panel, but what is the one thing that we should be thinking about that nobody's thinking about right now?
I think one point which earlier Idoy also mentioned, and I think Deepan touched base on the endpoint, right? The use cases to push to wallet. I mean, right now, if you see it, there are some jurisdiction restriction where you're not able to send the transaction to specific countries on a wallet. But I think over the time this will change. And with emerging wallet in multiple emerging market, like if you see Vietnam or Philippines, the way the wallet penetration has been gone, I think we're able to send payments to the wallet very quickly, and the volume of correspondence banking, especially for the low value, you will see that quite a decline in terms of the volumes. So I think these are the two things I think will be changing in the next 2 years.
Yeah, it'll be amazing when that's seamless, when you can just send to anybody, either using a phone number or proxy or whatever else. I think it's a future that is not too far off, to be honest. Ridoy, I mean, what are your thoughts on the future? What are we going to see that we're not thinking about today?
I think, in cross-border payments, the fundamental requirements are, let's say, the movement of data and value across a network or sort of a messaging layer. And, the timing and speed with which both travel will kind of define the value prop you give to your customer and the commercial model. So I think one thing that, may not necessarily surprise, but I can create a sizable improvement in experience to both the customer as well as the institution will be the use of blockchain for wholesale fund settlement. And I think an example of this would be, Partior, which was a company created initially between Temasek, DBS, and JP Morgan. Now StanChart has also come in as a sort of a founding member. I think they're, using this new network. And of course, it's a network, so it needs the sort of density and other members to join. But assuming that's there, then you can fundamentally kind of disrupt the entire RTGS network that's used today for the wholesale funds movement, and sort of adopt this new way, which could drastically, I think, improve the value proposition for, let's say, the use case of a P2P payment.
That's a really good point, and we profiled a little bit of what Partior is doing in the report that goes along with this webinar as well. And I think certainly one of the strengths that they have is the banks that they have on board with them and the input and the investment that they've gotten from the players, because that already kickstarts things. Deepan, coming to you as the final word, as always, on these things. I mean, what will surprise us in the future?
Sure, absolutely. I think the across P2P, B2C, SME, B2B, I think we'll see more microtization. And let me explain. As transactions become more digital, they'll microtize. This word doesn't exist. Don't look it up, please. But basically what we're seeing is, look, the user experience of sending that payment is easier. The cost per transaction has come down. The reach has extended. We've talked about endpoints. And basically what's happening now is that the average transaction size, therefore, across these use cases reduces. Now, as the average transaction size reduces, but cross-border payments, both for remittances, disbursements, imports, exports, continues to grow, what you'll see is a dramatic increase in the number of transactions. So as banks look at exploring their alternate solutions and their alternate rail providers together with fintechs, what they essentially need to do is ensure that they are prepared with processes, rails, that are extremely scalable and industrialized to cope with that volume increase that will come as the average ticket sizes reduce. So microtization, that's the one thing I think that will take us by surprise.
Yeah, that's a really good point. I mean, you don't think twice here in Singapore about pay nowing somebody $3 or $5 because it's trivial to make that transaction. It makes me think back to the first time I made an international transaction, which must have been 25 years ago or so, and it was really a wing and a prayer when I sent it, and 1 out of every 5 failed, and it was quite challenging back then, but things have changed. Unfortunately, we're out of time for this, but I want to thank our panelists, Diraj, Hridoy, Deepan. Always a pleasure to speak to you guys about what's happening in this space. And thank you everyone for joining us for today's webinar. As I mentioned, this webinar, The Dynamic Nature of Cross-Border Payments in Asia, is accompanied by a report that has also been published. So we will have links below the video of how you can download that report if you haven't seen it already. That was done in collaboration with Finastra. We also are recording this session, so we will share the recording on our website. So if you want to view it again, please do. And we'll also have contact details for any of the individuals in terms of their LinkedIn profile if you wanted to reach out to anybody from Finastra, DBS, or Visa. So thank you again, everyone, to the panelists, to the attendees. Really a pleasure to be here again and talk about what's happening in cross-border payments in Asia. Thank you.